Our Blue Line Futures President Bill Baruch joins us now with what to expect from OPEC Plus this weekend and what it means for oil. Thank you for joining us this morning here. So we were getting a bit of mixed messaging about, potentially people trying to short oil, that warning we got out of Saudi Arabia. But then we also have Russia saying, don't expect any cuts. What are your expectations going into these meetings?
I think they're going to stand pat here. They announced that previous cut at the start of April and it took effect in May. And, they haven't announced another cut, a follow-up cut per se, within 3 months of that initial cut. So I don't think that they're going to change anything at this time. Markets are still anticipating a deficit in the back half of this year as demand picks up and China growth reinvigorates. And I'm on board with that. So I think they're going to be patient here, though there is some friction growing between Saudi Arabia and Russia as Russia continues to produce over that 500,000 barrel per day mark that they were supposed to hit on.
Hey, Bill, it's Julie here. Just to kind of zoom out a little bit, we've seen oil really wavering lately. Yes, we've got a little bit of a rebound today, but do you think that we're going to have a range-bound situation through the summer, or do you think there's going to be a breakout one way or the other, whether it's the OPEC Plus meeting or something else that's a catalyst?
I do think that we're going to see oil remain buoyant. I think the tailwinds, as I mentioned, would be China growth coming back on. I think we're at a, if not quite there, maybe some peak pessimism on the China story. And Chinese manufacturing PMI gave us a light at the end of the tunnel. U.S. demand remains robust, and the White House will also have to look to replenish that SPR. So, in the next month, we're going to look at that from SPR releases to potentially having to replenish that. And I think that's going to become a tailwind for sentiment as well. And then when you get these big washouts like we had over the past week, a lot of the time, if we're able to start to stabilize, you can quickly see traders and managers reposition. I think the landscape within the equity space for individual names is very robust right now too. I mean, a lot of these names are hitting against support right now. I mean, for instance, before this show, I just added to things like Marathon Petroleum personally, and looking at things like that there is a good outlook over the summer, potentially improving refinery margins as well.
So that actually started to get to my next question is, would you be playing or fading specific oil and gas names going into this OPEC Plus meeting? And it sounds like at least one of those names caught your attention, but what's the profile that you would be looking for across some other players?
Well, we look for divergences within the landscape to bring opportunity. And, this week, I manage a commodity fund. And this week we had a sharp move lower. And I think one of the best ways, rather than for the viewers out there, rather than looking at an option skew, it may kind of gloss your eyes over talking about something like that. But you go to the CME group, they have that Fed Watch tool that everybody knows about, but they also have an OPEC tool, OPEC Watch tool, and it's not as perfect as that Fed Watch tool. I think the Fed Watch tool is amazing. The OPEC Watch tool actually, it too aligns off options volatility. So you have a big sell-off because of a sort of change in narrative that took place. You go back last week, Saudi Arabia, within that Saudi Arabia energy minister, within that interview, I think his comments were taken out of context that they were going to bring ouchies to the shorts. But I think he was referring back. So kind of when people heard about that, they heard about some of the rift within Russia and Saudi Arabia. We saw a big collapse in oil prices. And first, that Chinese manufacturing PMI, the state-run number on Monday or Tuesday night was a bad first read. So we had some heavy selling. What that did was push the option skew to really favor the puts were overpriced. So within that puts being overpriced, that OPEC Watch tool showed a probability, and still I think does, a 50-50 probability that they cut. That they add production or they leave unchanged. So I look for things like that bringing opportunity where puts are overpriced. You can actually look to sell some puts and buy some calls and sort of risk reversal sort of move. That's the way we look to play it. Now, as we've rebounded, I've rolled that out to more limited risk call spread, kind of looking into this weekend. I think there is a bit of a tailwind for crude oil to trade higher. But there's opportunity, as you get these sharp moves within the market, that I think you got to be aware of, and that's how you want to look to take advantage of that, and then position out, within your broader thesis. And our broader thesis remains that crude oil has a pretty good shot this year to be back above $80.
And how much of that is tied into what you're expecting in terms of the China demand side of the story?
I think, leaning on what the IEA said earlier back in May, they do expect China reopening, because the reopening tailwinds haven't shown up. We do think they will. And right as everybody gets really negative as they are currently is typically when you can see something like that start to revert. Now, we have, again, a light at the end of the tunnel with the private Caxton survey of Chinese manufactured PMI showing an expansion on Wednesday night. That really got crude oil started off of that floor, getting it back above $68. And now we find ourselves here back above 71. I was looking at 71 as a pretty big resistance. If that story continues to build tailwinds, I think crude oil, could be a major driver for crude oil to retest $80. The IEA seems to think so. I think OPEC Plus is still looking at those Chinese tailwinds. And China demand for crude oil products has remained strong within this sort of deteriorating growth environment. So if they pick back up, I think that could be a pretty robust component within a bullish